Protecting your mortgage. What we're going to do here is talk about more than protecting your mortgage. We're going to look at your overall financial resilience, because the mortgage gives us a gateway in to talk about it. It's generally the largest investment that most people will make in their lifetime. So of course we want to make sure that that's protected. But we also want to make sure that by saddling you up with a big old mortgage debt, we're not hampering you in later life, and we're making you aware of the other options out there that you have to put in place to protect yourself financially. So we're going to cover 4 of the main types of insurance products out there. The first being life insurance, then we're going to look at income protection, then we're going to look at critical illness cover, and we're going to look at family income benefit. We'll explain what all of those mean and touch on them so that you have an idea about what you can do to protect yourself financially. Let's start with life insurance. Not because it's the most important, that's really specific to each individual set of circumstances, but because it's the type of insurance that you're most likely to have heard about. Now, it should probably be called death insurance because that's when it pays out. It pays out upon death. Now, you might be in a situation whereby a couple of you are owning the property jointly together, and therefore would set up a life insurance policy so that that mortgage is cleared should one of you pass away. It's not nice to think about. None of this stuff we're talking about in this video is, so sorry for that, but it is really important. There's also scenarios whereby there are dependents left and you want to make sure that they're left a sum of money or the property with the mortgage cleared in that circumstance too. It's really there to pay a big lump sum of money upon death. That is it in a nutshell. Now, you may set this up in different ways, and you may set it up so that the balance decreases as your mortgage decreases. You may set it up on a level term basis so that it's going to pay out that amount of money should it happen, no matter what. Really, I think the key thing to know is that lump sum of money paid out upon death, that's life insurance. Now then, let's look at something called income protection. And this is really designed to protect or replace a portion of your income if you can't work through illness or injury. Now let's think about it. You've taken out the mortgage. To service that mortgage will have been yours and or partner's salaries. What happens if you stop earning? Well, suddenly and very quickly, I'd imagine that your ability to meet your mortgage payments becomes null and void. Beyond that as well, you've got your council tax bills, you've got your utility bills, you've got to put food on the table. All of this is about seeing yourself as the cash machine in the corner of the room, and if that stops working, suddenly your ability to finance your mortgage and your lifestyle is really, really impacted. So that's where income protection kicks in. It's a product that will pay out a proportion of your salary for an amount of time that you choose. It could go all the way through until you would be due to retire. It could pay out for a year, 2 years, 5 years. It's really about replacing your income. It'll generally be about 2/3 of your income because there's that incentive then for you to get back to work. But replacing that income to make sure that you can maintain those commitments, make sure you can stay in that nice new property you've just bought, and really look after yourself and your family during that period. Critical illness cover then is something different again. This is like life insurance in the fact that it's generally a lump sum payout, but rather than being on death, it's upon diagnosis of a critical illness or a serious illness. Now, every provider has their own definition of what is covered and what is not, so making sure you really understand what your policy looks after you for, and if there's anything specific you're worried about is covered, that can have a real impact on which provider you end up taking it out with. But ultimately, it's a lump sum payment at that point. And you can use those funds for whatever you want. You might take time off of work to recover or go to hospital appointments, and if work aren't going to pay you for those, then you've got a pot of money there to help you with that. It might be that you need to make some alterations to the home to make it suitable to you following whatever's happened. You might think, sod it, I'm going to go around the world and I'm going to take some time off and go traveling. What you use the money for is really up to you. And then there's family income benefit. So like life insurance, this is triggered upon death. I'm not getting any cheerier, sorry. But instead of providing that lump sum payout to maybe clear a mortgage or something like that, this is about replacing income and providing that family support when you've lost an earner from the household. It may well be set up upon a shorter term to get a child through key periods where there might be childcare costs, enabling the other parent to go to work, or conversely, it might enable that parent to give up work so they can be the one who looks after the child at home. It's really about providing a sum of money that replaces a salary for a fixed period. So that's a really top level overview of some of the protection products that are available to you. And of course, there's no one size fits all. And it may be actually that the best thing for you is to have a suite of the different types of products to fit your sort of budget and your wants and needs that do a really good job no matter what the circumstance for you. So take some advice around this. You can obviously set this stuff up yourself, but equally take some advice because it's really important to get right. You can see just how impactful it can be on a family should the worst happen. Death happens, people are unfortunately diagnosed ill, and this stuff is never nice to think about, but it is something that you can plan for. So if you do want a review, we charge no fees at all in my business to talk to you about this. So get in touch and one of our experts will have a chat with you today and work out what the right thing for you is.